Hey everyone, it's Hawk, and in this video we're diving into some pretty interesting and potentially concerning predictions about the financial landscape in 2024. Now, these predictions come from Robert Kiyosaki, author of the personal finance classic Rich Dad, Poor Dad. Love him or hate him, Kiyosaki's take on money and markets has sparked a lot of conversation, and his 2024 predictions are no different. We'll be covering his thoughts on everything from the stock market and real estate to cryptocurrency and the global economy. Understanding these predictions and the reasoning behind them is crucial for all of us, whether you're a seasoned investor or just starting to take control of your finances. Let's jump right in. All right, let's kick things off with Kiyosaki's stock market prediction, and buckle up because it might be a bumpy ride. Kiyosaki, a well-known financial educator and author, has been vocal about his concerns regarding the current state of the stock market. Kiyosaki believes that we are headed for a major stock market crash in 2024. He has been warning about this for some time now, and his predictions are based on a variety of economic indicators and trends. And when I say major, I mean potentially worse than the 2008 financial crisis. The 2008 crisis was a significant event that led to a global recession, and Kiyosaki fears that the upcoming crash could have even more severe consequences. Now, before you hit the panic button and sell all your stocks, it's crucial to take a step back and analyze the situation. Panic selling can often lead to significant losses, and it's important to make informed decisions. Let's understand why he's saying this. Kiyosaki's predictions are not just based on gut feelings, they are grounded in his analysis of the current economic environment. Kiyosaki points to a number of factors, including what he sees as an overinflated stock market fueled by years of low interest rates and quantitative easing. These policies have led to an artificial boost in asset prices, creating a bubble that he believes is unsustainable. He argues that these policies have created asset bubbles that are ripe for bursting. When these bubbles burst, it can lead to a rapid decline in asset prices, causing widespread financial instability. He's also concerned about rising inflation, which has been a growing issue in recent months. Inflation erodes the purchasing power of money and can lead to higher costs for consumers and businesses alike, which could force the Federal Reserve to raise interest rates aggressively, potentially triggering a recession and a stock market downturn. Higher interest rates can make borrowing more expensive, slowing down economic growth and leading to a decrease in corporate profits. Kiyosaki is a big believer in understanding and preparing for economic cycles, and he sees this potential crash as a natural part of that cycle. Economic cycles are characterized by periods of growth followed by periods of contraction, and being prepared for these cycles can help investors navigate through turbulent times. And he sees this potential crash as a natural part of that cycle. While it may be alarming, it's important to recognize that market downturns are a normal part of the economic landscape. But it's important to remember that predicting the market with absolute certainty is impossible. There are always unforeseen factors that can influence market movements, making it challenging to predict with 100% accuracy. Even the most seasoned economists and investors get it wrong sometimes. Market predictions are inherently uncertain, and it's essential to approach them with a critical mind. So while Kiyosaki's predictions shouldn't be taken as gospel, they do offer a valuable perspective. His insights can serve as a reminder to stay vigilant and proactive in managing your investments. They do offer a valuable opportunity to examine your own portfolio and risk tolerance. By staying informed and prepared, you can better navigate the uncertainties of the stock market and make decisions that align with your financial goals. Now let's move on to real estate, an asset class that Kiyosaki has always been a proponent of. He has often emphasized the importance of owning tangible assets, and real estate fits perfectly into this category. Unlike stocks, which can be volatile and subject to market whims, real estate offers a more stable and predictable investment opportunity. Despite his bearish outlook on the stock market, Kiyosaki remains bullish on real estate, particularly in certain sectors. He argues that real estate provides a hedge against inflation and can offer consistent returns through rental income and property appreciation. He believes that income-producing properties like rental properties and multifamily units will continue to hold their value and generate cash flow, even in a recessionary environment. These types of properties are less likely to be affected by economic downturns because people will always need a place to live. This is because people will always need a place to live regardless of what's happening in the stock market. The demand for housing remains relatively inelastic, meaning that it doesn't fluctuate as much with economic cycles. However, Kiyosaki is cautious about certain segments of the real estate market, particularly luxury properties and speculative developments. He warns that these areas can be highly volatile and are often the first to suffer in an economic downturn. He believes that these areas are most susceptible to a downturn if the economy weakens. Luxury properties in particular can see significant price drops as demand for high-end real estate diminishes during tough economic times. He also emphasizes the importance of location, stressing that investing in areas with strong fundamentals like job growth and population growth is crucial for long-term success in real estate. Properties in these areas are more likely to appreciate in value and provide steady rental income. So, while Kiyosaki remains optimistic about the overall real estate market, he's urging investors to be selective and focus on properties that generate income and are located in desirable areas. By doing so, investors can mitigate risks and ensure a more stable and profitable investment. Moving on to the world of cryptocurrency, we delve into the thoughts and predictions of one of its most vocal advocates. Robert Kiyosaki, the author of Rich Dad, Poor Dad, has been a vocal advocate for Bitcoin for years, often sharing his insights and predictions with his followers. He frequently pits Bitcoin against traditional assets like gold, arguing that Bitcoin has unique advantages that make it a superior investment in today's digital age. Kiyosaki views Bitcoin as a hedge against inflation and a store of value in an increasingly uncertain world. He believes that as governments print more money, the value of fiat currencies will decline, making Bitcoin an attractive alternative. Interestingly, despite his concerns about a potential market crash and economic downturn, Kiyosaki remains bullish on Bitcoin. He sees it as a safe haven in times of financial instability. Kiyosaki remains bullish on Bitcoin. He believes that its decentralized nature and limited supply make it an attractive alternative to traditional currencies, especially in times of economic turmoil. He believes that Bitcoin's decentralized nature and limited supply make it an attractive alternative to traditional currencies, especially in times of economic turmoil. This belief is rooted in the idea that Bitcoin cannot be manipulated by any single entity, unlike fiat currencies which are subject to government policies and inflation. Especially in times of economic turmoil, Kiyosaki sees Bitcoin as a reliable store of value. He predicts that as more people lose faith in fiat currencies and traditional financial systems, the demand for Bitcoin will continue to grow. He predicts that as more people lose faith in fiat currencies and traditional financial systems, the demand for Bitcoin will continue to grow, potentially driving its price higher. The increasing demand for Bitcoin, driven by a growing distrust in traditional financial systems, could potentially drive its price higher. Kiyosaki believes that this trend will continue as more people seek alternatives to fiat currencies, potentially driving its price higher. However, Kiyosaki also acknowledges the volatility of the cryptocurrency market. He understands that while Bitcoin has great potential, it also comes with significant risks. However, Kiyosaki also acknowledges the volatility of the cryptocurrency market. He advises investors to be cautious, do their own research, and only invest what they can afford to lose. He advises investors to be cautious, do their own research, and only invest what they can afford to lose. This cautious approach is essential given the unpredictable nature of the cryptocurrency market, and only invest what they can afford to lose. He often emphasizes the importance of understanding how Bitcoin works, its underlying technology, and its potential impact on the future of finance. He often emphasizes the importance of understanding how Bitcoin works, its underlying technology, and its potential impact on the future of finance. Kiyosaki believes that those who educate themselves about Bitcoin will be better positioned to navigate the complexities of the cryptocurrency market and its potential impact on the future of finance. As the world continues to evolve, Kiyosaki remains confident that Bitcoin will play a significant role in shaping the future of the financial landscape. Now let's zoom out and look at Kiyosaki's predictions for the global economy, and I'll be honest, his outlook is pretty bleak. He believes that the world is headed for a period of significant economic turmoil, driven by factors like rising inflation, geopolitical instability, and unsustainable levels of debt. Kiyosaki is particularly concerned about the increasing national debt levels in many developed countries, arguing that it's only a matter of time before these debts become unsustainable. He believes that this could lead to a sovereign debt crisis, potentially triggering a global recession. He also points to the ongoing conflict in Ukraine and rising tensions between the US and China as potential catalysts for further economic instability. Kiyosaki believes that these geopolitical risks, combined with the economic challenges, create a perfect storm for a global economic downturn. He urges individuals to prepare for this potential downturn by diversifying their investments, reducing their debt, and building up their emergency funds. So, given Kiyosaki's predictions, what can you do to prepare for 2024 and beyond? Well, Kiyosaki emphasizes the importance of financial education and taking control of your financial future. He encourages individuals to educate themselves about personal finance, investing, and the economy. He believes that knowledge is power and that the more you understand about how money works, the better equipped you'll be to navigate challenging economic times. Kiyosaki also stresses the importance of building multiple streams of income. He argues that relying on a single source of income, like a job, is risky, especially in today's uncertain economy. He encourages individuals to explore different avenues for generating income, such as starting a side hustle, investing in rental properties, or building an online business. He also emphasizes the importance of living below your means, avoiding debt, and saving aggressively. He believes that building a strong financial foundation is crucial for weathering economic storms and achieving long-term financial security. So there you have it, Kiyosaki's predictions for 2024. It's a lot to digest, and it's important to remember that these are just predictions. No one has a crystal ball, and the future is inherently uncertain. However, I think Kiyosaki's insights offer a valuable opportunity to reflect on our own financial situations and make sure we're prepared for whatever the future holds. Whether you agree with his predictions or not, his emphasis on financial education, diversification, and building wealth-generating assets is always relevant. What do you think of Kiyosaki's predictions? Let me know in the comments below. And if you found this video helpful, be sure to give it a thumbs up and subscribe to the channel for more personal finance and investing content.